Let us see certain other things in case of depreciation. The first one is what happens in case of a lessor and lessee. We saw so often that many people lease out certain assets to the other. The most common is car lease, which is offered by many companies to their employees. So in that case, there is a lessor who's leasing out the car, and there is a lessee, the person who's taking this asset on lease. Now, who should get the depreciation in this case? Let's read what is written. Lessor, who is the legal owner of the assets, is eligible to claim depreciation for tax purposes. Now, what is important to note here is that the lessor is entitled to depreciation for tax purposes. For accounting purposes, there is an accounting standard 19 for accounting on leases, but that is not applicable for tax purposes. The accounting treatment prescribed as per the accounting standard 19 for lease does not affect the allowance for depreciation under the Income Tax Act, as it is allowed only to the owner of the asset. Now, this is something which we saw when we saw the conditions relating to the claim of depreciation. The first condition that was there, if you remember, and if you don't remember, please go back to the other video where this aspect has been discussed, which is dealing with the conditions relating to the claim of depreciation. The first condition is that the assessee has to be the owner of the asset. In case of a lessor and a lessee relationship, the lessee does not become the owner of the asset unless and until the lease comes to an end and the lessee has the option to buy the asset. So therefore, till such time that option is exercised, the lessor himself is entitled to the depreciation, and it does not affect his right to claim depreciation. Accounting Standard 19 does not have any implication for tax purposes. In Accounting Standard 19, basically, you have an option in case of a finance lease. If there are certain options or certain conditions which are satisfied, then even the lessee may be entitled to claim depreciation. But that is not the case here, and therefore that is not applicable. Second, definition of plant under section 43.3. All along we've been looking at depreciation on plant and machinery, plant and machinery. What do you mean by plant? This definition is given under section 43.3. Plant includes, again, please note, very important, it's an inclusive definition. So even beyond these things, there could be certain other stuff which has to be included within the definition of plant. Plant includes ships, vehicles, books, scientific equipments used for the business purposes, but do not include tea bushes or livestock or building or furniture fittings. So basically, depending on the nature of business, there could be other things also which may be included within the definition of plants. All these terms are self-explanatory, so I'm not getting into the details of this. Theater building and hotel building. So you may see in case of a cinema hall, there has to be a theater building. And in case of a hotel, you have the hotel building. So do these amount to plant and machinery? And what is the reason why one would want to classify this as plant and machinery? The reason is that historically, plant and machinery are entitled to a higher rate of depreciation vis-a-vis building. So people, especially in these two businesses, used to try and attempt if they could classify their plant and machinery as, or rather classify their buildings as plant and machinery. But is that the law? Let's read. Theater building and hotel building are treated as building and cannot be treated as plant for the purpose of claiming depreciation. So what does the law say? The law says that these two cannot be considered in the category of plant. They have to be considered as building only.